go in 5, 4, 3, 2.
Good morning, everyone. I'm Jeremy Berke. I'm the editor-in-chief of Cultivated. It is Wednesday, June 18th, and I'm here with Kaelen Castetter of the Castetter Cannabis Group and various other things. So, Kaelen, welcome. Good to have you on the show. I know we've been planning this for a while, so it's good to do this.
Yeah, thanks for having me, and just thanks for your contribution of getting really good content and investigative journalism out into the cannabis industry. I know you've seen a lot of publications and outlets kind of fall or scale back their cannabis coverage. So what you're doing is really necessary for the industry, for policymaking as well. So
yeah, no, look, we really appreciate that, and I think we certainly don't want to be the last man standing, but if we are, that's a position we're happy to take. So
sure.
Certainly appreciate that. Kaelen, for viewers, listeners, watchers who aren't familiar with you, could you just tell us a little bit about yourself, about the Castetter Cannabis Group, and about the various things that you're up to over the past few months?
Yeah, absolutely. So I've been in the cannabis industry, I tell people, pretty much my whole life. My father was a legacy cultivator, and he had started the first hemp-infused wine in 1997, shuttered by the federal government in 1999. And in 2015, I restarted it with him, and we were the first licensed hemp processor in the state. Fought back against some of the federal rulings, and was able to really understand firsthand how regulatory and policy making affects entrepreneurship, right? And the ability for entrepreneurs to succeed. So worked very closely on legalization and have been in and around legislation, policy, regulatory efforts in New York State in the cannabis industry since then, since 2015. For the past few years, I've worked through company Grove to provide regulatory compliance expertise, advisement and management to companies across the supply chain here in New York. And then with Castetter Cannabis Group, lobbying, directly working in policymaking. And right now I work with the manufacturers, the Empire Cannabis Manufacturers Alliance. I direct their policy, and then we lobbyist and work in Albany, working with the OCM, working with other stakeholder groups, really for a fair and robust marketplace and policy outcomes that achieve that. So I have a pretty singular focus on the policy side right now, which is working with the manufacturing community in New York.
Yeah. So for our viewers, many of them are in New York. Some are not aware of the nuances of the conversation. Could you just talk a little bit about some of the big fees that the New York State government wants big companies to pay and your perspective on them? And I'm keeping that question open-ended deliberately. So, yeah.
Yeah. I mean, I think the interesting thing about the fees and the fee discussion is that it opens up a larger conversation about fairness in the marketplace and the role of larger companies as compared to smaller companies, and how the state should interfere or intervene in the market, right? So it elicits these larger philosophical conversations.
Right.
But basically, there are a whole set of fees that dispensaries, cultivators, processors pay for licensing, and every 2 years when they renew, application fees, et cetera. There is a special class of license holders, though, that have been created because they were medical cannabis license holders. And so the medical cannabis program predates adult use legalization by about 6 years, right? And so you had a cohort of 10 or 11, depending on who you ask, and depending on how you count that, companies, many of them the large publicly traded entities, who got medical cannabis licenses at a time when the medical cannabis program was very difficult to achieve a license in. It was a merit-based process, and the regulations are very strict. So they were essentially grandfathered into adult use cannabis in a way that it's pretty complicated, right? So basically, the state allowed for these medical companies who were required to be vertically integrated, to have stores and cultivation, processing, distribution, to get a license in the adult use marketplace. But in order to do so and maintain their verticality in adult use, which, by the way, is not allowed for anyone else. And we can get into that later in the show on why that's so important. But in order to maintain that verticality, they had to pay a special licensing fee, essentially for the privilege of doing so. And that special licensing fee is intended to go towards social equity incubator programs, administration of the program in general, right? And that fee in the regulations was $20 million. And it's very important to note, too, that fee only is for the medical cannabis companies who decide to convert into an adult use license that is vertical, right? So they have two options, an ROD, a RO, registered organizations, medical organizations with a dispensary, or a ROND, registered organization, not a dispensary. If you elect to not have a dispensary, you, as a medical cannabis, like Solo, ROND, you have the largest indoor footprint by magnitudes in the entire marketplace, 100,000 square feet of indoor canopy, and you can process and wholesale your products into the market while maintaining your medical cannabis stores, but not able to turn those medical cannabis stores also into adult use retailers. That fee, then you just pay the same licensing fee as anyone else, right? If you decide that no, these co-location of these adult use stores are very important for our business model, you have to then pay this special licensing fee, which in regulations is $20 million, paid over time. There's a whole payment schedule, tied to revenue and how many stores when you open them, et cetera. Recently in the budget, they had codified, they put into law this fee, the special licensing fee, and reduced that amount to $15 million and changed some of the schedule of payments, et cetera. This created a lot of controversy. It's also a little bit surprising. Why are they taking, regulations and putting them into law? I think simply put, it's to defend against lawsuits, right?
Right.
So yeah, that's the context and that's the history. And it's really talking about a very small class of license holders and maybe only a few, a max like 10 licensees who are going to have to pay that fee.
Yeah. So we had, as you're familiar with, a couple weeks ago, this was around the beginning of May, Boris Jordan, the chairman and CEO of Curaleaf, which is one of the larger publicly traded cannabis companies in the US. Jordan's perspective was that this fee is too high, right? They said that these companies are struggling for various reasons that, I don't want to sort of make this discussion about. These companies are struggling. He was asserting they can't afford this fee, so it should be lower, right? And I will say, one of the organizations you're involved with, the Empire Cannabis Manufacturers Alliance, and I'll just sort of paraphrase the quote here, said that the fee being reduced prioritizes out-of-state cannabis conglomerates over New Yorkers. So I guess like to sort of ask the question in a distinct way, is it your view that the fee should have remained at 20 million, or is there, wiggle room here that maybe, would have come to a happy median, let's say?
Yeah, I think my view is that there's a lot more important issues to address in the budget than the RO's fees. And that's really the source of frustration, is that we are, that presumably the government is spending a lot of time negotiating, reducing a fee by $5 million that affects a very small amount of operators who aren't based in New York, instead of addressing the dire need for access to capital, restructuring how track and trace works and who pays for that, including, changing some of the rules around and the deadlines for filing excise taxes, right? So there was a lot of priorities, a lot of, things that need to be done in the budget. And this was really the main focus. And that's, I think, the major source of frustration. In terms of, Boris's thoughts on the fee and it being unfair and that, businesses are struggling, we completely understand that. And, the manufacturing and the processing community, we emphasize with that, right? I mean, everyone is struggling in the space, and, the government shouldn't be the only beneficiaries of the cannabis industry. So I think philosophically we're aligned there, right? But practically, I think he's leaving out a really key distinction, is that they don't have to pay that fee if they don't co-locate their adult use dispensaries. And so that really brings up the question of verticality and why New York's two-tier marketplace is so important for competition and fairness, right? The alcohol industry is the easiest one to look at. And for the viewers, everyone knows an entrepreneur, a small business owner who makes a living and hires people because of the alcohol industry. It's a bar, a venue, a microbrewery, a cidery, right? A distributor, importer. And And that has created a pathway to entrepreneurship and for, really to the American dream, right? Being able to, realize wealth through ownership of a business and being able to go out there and compete in the market in a fair way, right? So the two-tier market in alcohol allows for fair competition. It allows for the stores to be a marketplace of the best brands to serve the consumer and for brand startup products to say, I've got the best product. I've got good pricing. I've got good marketing. I've got good support behind this brand. So carry my product. If you have vertically integrated stores where the stores are owned by the brand, their interest is very clear. No matter what they say, their interest is to make more money for their brands. Their higher margin is going to be the products that they produce, right? So the prohibition on vertical integration is very important. And even though you have a prohibition on vertical integration in the alcohol industry, we still have billion-dollar companies. Constellation Brands was a New York-based company, is a New York-based company, and was a small-time entrepreneur who built that. And we have no problem philosophically with that. And if that's going to be Boris, or that's going to be one of the New York entrepreneurs right now who are building brands and sophisticated processing, manufacturing operations, our whole thing is let's let the market decide that, not regulatory implications. So yeah, I mean, I think generally, $15 million, it's a lot of money to have to pay to the state. And I would like to see that money be put to supporting other operators and supporting access capital. But there's a choice, and their choice to be vertical and to have an advantage over everyone else in the marketplace comes at a cost.
Yeah. I guess it sort of begs another open-ended question. Like where do you see the debate going at this point, right? Because the bill, the $50 million fee, it's codified in the budget, right? Like it's sort of a moot point. They can choose to pay it, they can choose to not pay it, right? But again, I mean, you brought up the problem of access to capital. I mean, this $15 million fee, if the companies do choose to pay it, could really help that, right? What are some other solutions to help entrepreneurs access capital, right? If the companies don't choose to pay this fee, and in your view, how could the government actually help support that better?
Yeah, I mean, I don't think the government should bank on this $15 million fee, right? I think the market dynamics and the economics around cannabis has shifted significantly over the past 10 years, and federal legalization and it's not happening, whatever, right? So these companies need to make that business decision, and I wouldn't count on many of them deciding to pay $15 million. Right. They may or may not. What the state should be focused on is addressing the very real need that they tried to address through the DASNY fund, right? Providing capital in a private-public partnership where the state seeded money, took on risk essentially by doing so, in order to attract private capital, lower the interest rates, and the whole point of the DASNY fund, the social equity fund, was to provide ready-to-go turnkey storefronts for license holders so that they could come into the market and then run a good business. It didn't work for a myriad of reasons, and I don't think we have the time to really litigate that here. But there's, and it deserves, I think, further scrutiny from the legislature. But I think we need to move on and not say, "Oh, we tried," and throw our hands up. That happens in government a lot, right? That's not good enough here. I think that the state needs to double down. The state could look right to New York City. New York City has established a public-private partnership where the city has determined that, hey, we want the tax revenue, not just the direct sales tax revenue from cannabis businesses, but the payroll taxes, the income taxes, the job that's being created, in this sector. And we're going to invest. We're going to put money in, which will lower the overall interest rate and provide access to capital through public-private partnerships. Mm-hmm. The state should take that model, scale it up, and allow for folks in industry to access loans, maybe also some smaller grants just to get started. But if the SBA is going to sit on the sideline and not back small business loans for cannabis like they do for the rest of the economy, the New York State needs to step in and essentially be what the SBA is on the federal level.
Yeah. And I guess, I just want to sort of come back to the city a little bit. Like, this public-private partnership model seems very effective. Like, do you think that this should become an issue in the mayoral race, where we're about to have an election next week? Like, we don't hear a lot of talk about this dynamic new industry that is actually, in some respects, starting to thrive in New York. do you think that should be an issue? And how can the city even better support the dynamism? I mean, it's New York City, it's the capital of entrepreneurship and finance, the dynamism of the cannabis industry.
Yeah, so I mean, actually, I think the outgoing mayor. Well, I guess we'll see if he's the outgoing mayor, but the current mayor and their administration actually has done some things, whether they realize it or not, that are incredibly progressive. Beyond this loan fund, their decision at the beginning, after adult use cannabis, what was legalized, was if you can locate a retail storefront here, then we're zoning it for cannabis retail, which. Right. When you follow cannabis and the trajectory of cannabis markets nationwide and the challenges that dispensaries have in other jurisdictions, that's groundbreaking. I mean, that's a massive move. So I think right there, they supported it. I think direct financial, support and support, through technical assistance to entrepreneurs has been great. There's a fix that New York State can make to their law in terms of on-site consumption, and do what the state did, which was essentially carve out on-site consumption license holders from the Clean Indoor Air Act or Smoke Free Act, whatever New York City's analog is. So I think, the next administration needs to build on that progress and needs to look at cannabis as just another business to support, just like they support the film industry, which brings dividends back to hospitality, tourism industry, but also not looking at cannabis in a silo and say, cannabis is hospitality. Cannabis is, retail. Cannabis is logistics. Cannabis is potentially manufacturing and urban farms and urban growing, right? And we should really make sure that the different departments are talking to each other, right? That's Department of Buildings and nightlife and hospitality and small business services. So you're not seeing a lot of candidates talk about it. I think the most popular political issue is just shutting down illicit stores, which New York City has done a pretty good job of. But I think it needs to get into the gubernatorial election conversation. That's the next election next year after the mayor's race. It's going to be very important, I think, for our next governor to lean into cannabis before that opportunity slips away.
Yeah. Perfect segue to my next question. And I know, we have many regulators and policymakers watching us. So I'll sort of avoid stepping on toes here, but I do want to have an honest and forthright conversation. You mentioned something interesting when we were emailing about setting this up. That, New York has an interesting regulatory structure. And just for viewers who are unaware, the Cannabis Control Board sits on top of the Office of Cannabis Management, which actually does the regulatory work. You said the blurring of responsibilities is causing a little bit of turmoil. Can you, between the two, the CCB and the OCM, can you explain that a little bit and maybe sort of provide what you think is a more effective regulatory pathway?
Yeah, absolutely. And there's been some updates since then, right? Including a new chair of the Cannabis Control Board. So I'll get into that and what I think that means. But, nothing policy-wise, legislative-wise happens in a vacuum, right? So right now, New York City is, grappling with Cuomo's legacy, what that means, what, strong leadership really means, and whether it's always a positive or could be a negative. And so the MRTA, the cannabis law, the CCB was envisioned to provide a checks and balance of the governor, right? And specifically Cuomo's administration, right? To allow the legislature a chance to review regulations and appointments and to get involved if this was going a way that was contrary to the intent of the law. Unfortunately, you got to be careful what you wish for, right? Because what ended up happening is a cannabis control board who saw, maybe a political opportunity or felt political pressure to provide more oversight of the OCM and therefore infuse philosophical views into very complex policy making decisions. And that's been really unfortunate because I think over the past year, it's kind of paralyzed the regulatory process. And it's also thrown a lot of uncertainty into the business environment in terms of licensing. If I bring my type 3 brand application to the OCM and the OCM says, yeah, you're good to go, it's really just paperwork, is the chair of the Cannabis Control Board going to call my business out for political points during a meeting, which, by the way, the outgoing chair, Tremaine Wright, did that and sent a lot of confusion to the market. Like, okay, we're licensing brands so that the OCM can have a little more insight into what's going on in the market and provide more enforcement. It's actually optional for a brand to get that license. And now the chair is tabling that issue and pushing to another meeting. The chair also had waded into issues on how many licenses should be awarded. The OCM had provided very, data-backed research and findings and how many licenses and how much supply the New York market, can bear at this point. The Cannabis Advisory Board reviewed those and provided recommendations to the Cannabis Control Board. And yet the Cannabis Control Board decided that they were going to be, and said this in many meetings, the outgoing chair said, we are the only ones who decide how many licenses are issued. Mm-hmm. It's actually unclear in the cannabis law if that's their jurisdiction or the OCM. So that's an example of where the business community here in the cannabis industry in New York deserves consistency and deserves consistent messaging on who is the regulator, who's in charge. And so I think we just saw the removal of the full-time role of the chair of the Cannabis Control Board, which is a big deal, because now you don't have someone whose full-time job it is to review regulations and to get involved in the process. Really, the board is going to be a fully part-time board with a new chair who was formerly on the board and served in a regular board member role. And she's now going to be the chair. And they are, I think, an important step for oversight. And I think making sure that the public has an opportunity to weigh in on regulations and that their voice is heard, but not do the policymaking. The OCM has teams of experts. They should have more experts. Their budget we should have a surge of resources to the OCM to hire more economists so that we get things right and folks in these policymaking positions. But the board, if the OCM makes that process, engages stakeholders, spends months researching and defending these regulations, it should not be thrown away or tabled at the whim of one board member or because of politics. So I think if what the appointment of the new chair, the removal of the full-time role as chair of the Cannabis Control Board, if that means what we think it could, a more deference to the agency, to the Office of Cannabis Management, I think that's a lot better structure. And I think the lawmakers can go in and clarify the cannabis law in that section and be like, okay, this is what we want the OCM to do, and this is what we want the Cannabis Control Board to do.
Yeah, that makes sense. I'm just going to run through a little quickly because we're kind of up on time here. I wanted to talk a little bit about, what are the biggest issues plaguing the New York cannabis market right now, and that's product conversion, right? Mm-hmm. The New York Times has covered pretty expertly the story, and when the New York Times covers the story, it filters out of our little cannabis world and into the mainstream. The OCM has announced a phased timeline to get businesses on the track and trace system. There are some deadlines coming up on that front. What are some of the solutions in your mind to solving this product conversion issue? And for viewers that don't know, that's out-of-state cannabis products being marketed as in-state New York cannabis products. What are some maybe quick, immediate fixes and some sort of long-term fixes to make sure that this issue doesn't persist in the future?
Yeah, I mean, I think the OCM implementing track and trace is important for transparency in the supply chain. But if that was a silver bullet, we wouldn't see products being diverted from legal markets and being inverted into other legal markets, right? So it is not going to be the cure for inversion. I think what's frustrating for my members at the ECMA and for myself personally is that since the beginning, we've raised this issue of access to controlled environment flower and indoor flower. The New York consumer wants a specific type of cannabis flower that can really only be done in a controlled environment. You talk about the terpene profiles, the coloration, the density of the buds, right? You need to have a controlled environment, especially in today's world with the uncertainty of climate change and intense weather patterns that we see all across upstate New York and across the world. So I think what's fueling inversion in a big way is the fact that dispensary owners are getting asked by their customers constantly for indoor flower at a good price. The market has no way to supply that because the 250 some odd cannabis cultivators never had an option to grow indoors in a meaningful way. They can grow in a greenhouse up to 12,500 square feet, or they can get a micro business license and grow up to 3,500 square feet indoors. But there are no scale indoor cultivation besides the few ROs that are operating in the market and they get 100,000 square feet, right? So that policy decision, which was made right at the start of the rollout, has resulted in this pretty large amount of inversion, and it cannot be solved until New York producers who are licensed here can grow, indoor flower at scale and bring it to market at a price that consumers want. The illicit, stores and retailers can continue to flourish until we can have that. And dispensary owners are just going to continue to ask their vendors, hey, bring me indoor flower. And unfortunately, the vendors are bringing them indoor flower. It's just coming from Oklahoma, Maine, California, wherever. And it's not coming from New York.
Right.
All the time. Some of it,
right.
Of course.
We've talked a lot about the issues in the New York cannabis market, right? Kaelen, I want to end on this question. What is the most exciting thing to you about New York cannabis, looking towards, the end of this year and into next year? What's like exciting you? What's getting you up in the morning?
I think that it's been largely successful in terms of propping up small business owners. For me, I'm passionate about making sure that we have, again, a pathway to the American dream, a pathway to the middle class and upward mobility, which is the ownership of businesses. Mm-hmm. So having a fair marketplace and having a place where anyone can go out there and compete and win or lose, but know that they came into a fair playing field is really exciting to me. And even more exciting, beyond just 1 or 2 years from now, is can the cannabis industry and the marketplace that we're creating in New York serve as a model for making our broader economy more fair, equitable, and accessible to small businesses.
Yeah, that's a great note to end on. Kaelen, thank you so much. We'll have you back in the next couple months again to talk about these issues more. But we appreciate the time and appreciate all the work you're doing. Thanks so much.
Thank you, and you as well, Jeremy.
Yeah, thank you.